Hello and welcome. I'm Suyash Maheshwari and you are watching First Stick here on News9. We bring to you the morning buzz on the Lal Sheet. And it's a brand new week this Tuesday morning, and it will be a short one with just 3 trading sessions, as Friday the markets would be shut on account of Republic Day. Now, even though it's a holiday shortened week, we'll have lots to react to on both global as well as domestic front. Now, 8 central banks from the G10 group of countries will relay their monetary policy decision, and back home we are in the thick of the earnings season, and companies like your Axis Bank, Adani Power, Tata Steel, Tech Mahindra among others will report their numbers as well. Moreover, we also have the monthly FNO expiry of the January series this week, so we have lots to react to in this 3-day working week for the markets. But before we get into all that, let's look at how the global setup is looking this Tuesday morning. And not much in terms of daily movements on the Wall Street. Dow Jones was up somewhere around 1/3%, whereas S&P 500 on the other hand ended about 0.2% higher. Both indices are, by the way, at record high levels. We touched a new record high on Friday, and we have been the US markets at least have been building onto the the gains on Monday as well. And Dow Jones has even toppled the 38,000 mark for the very first time. Asian markets also had a very strong start to the trading session on Tuesday morning. Hong Kong stocks rebounded Tuesday after 2 straight days of decline. They were up somewhere around 2.5% this morning. Meanwhile, Japan's Nikkei 225 index rose as well. That index was up about 0.5% as well. This was on the back of Bank of Japan keeping the monetary policy unchanged in its first monetary policy meeting for the year 2024. Hong Kong's Hang Seng, as I said, was up somewhere around 2.5%. It went up as much as 3%, and the rally is on the back of the tech stocks leading the charge. This comes after a Bloomberg report revealed that Chinese authorities are considering a package, of a stimulus package worth 2 trillion yuan, or about $278 billion, to stabilize its stock markets. And if you look at the other cues, not much movement as far as the dollar index and the US 10-year is concerned. The yield on the 10-year was around 4.1% mark, and the dollar index as we speak is hovering around the 103.3 sort of levels. Oil prices, now that saw a big spike overnight. Oil prices rose about 2% on concerns over global energy supplies following a Ukrainian drone strike on Russia's Novatek fuel terminal, and as extreme cold weather continued to hamper US crude production. Brent crude currently is hovering just below the $80 a barrel mark. We did top that overnight, but we are back below the $80 a barrel mark, essentially at $80, because Brent crude as we speak is somewhere around $79.9 a barrel. Now, back home, Indian markets have witnessed a very strong start to the week, with Nifty opening above the 21,700 mark this Tuesday morning. 21,700 is also a key support for the index, as it coincides with the 50% retracement of that entire 600-point fall we saw from record high levels to last Thursday's low. Now, if we fail to stay above the 21,700 mark, which by the way we did test, we did break below that, and at day's low we were at 21,686, which by the way coincides with the 20-day moving average. So we need to, perhaps, since both levels are very close by, we need to respect those levels, and if we fail to break those levels, 38.2% retracement levels, which comes at around 21,605, will come into play. On the upside, 21,800 will be a key resistance zone for the Nifty, as indicated by the Fibonacci retracement levels. And I was talking to a lot of experts. According to them, if we close above 21,800, it could mean a reversal in that short-term bearish sentiment that we have seen since the last week. And even the broader markets, now they have opened higher this morning. The mid-cap 100 index as we speak is above the 48,000 mark. In fact, it has made a new record high of 48,493. The small cap index is also just a stone's throw away from its record high level, and as we speak the index is up somewhere around the 0.07% above the 15,500 mark. But with that, let's also bring on board Avni Bhatt, Senior Vice President at JM Financial. Good morning, Avni. Thank you for joining us here on News9. I want to begin with the, of course, asking about Nifty and the kind of volatility that we have seen over the past couple of weeks. Essentially, last week, at least a week before that, we were up 500 points in a matter of 2 sessions. We declined about 600 points from there on. On the whole, January series, historically speaking, has been a down month for us, and that's how it's turning out to be this time around as well.
Good morning, Suyash, and a very good morning to all the viewers as well. So as you rightly pointed out, yes, last week was a very roller coaster ride for all the indices, Nifty, Bank Nifty. For the first 2 days, it made record highs, and then Wednesday we saw a big gap down opening and further correction also. But the very interesting data point that if you look at is India VIX. In spite of such gap openings on both the sides, downside as well as on the upside, and also intraday swings, India VIX has cooled off below 14% at somewhere around 13.8 was the closing on Saturday. So if you look at only India VIX, then this volatility is well within the range, but there is no indication of any major breakdown in the market so far. VIX below 14% is a good sign of stability in the markets. So intraday volatility, also gap openings will be a part and parcel of the markets, but there are no indications of any major breakdown as such going ahead. And if you look at the short-term trading view, then I think 21,700 call is where the highest open interest was for the January series. And today also we are looking at markets hovering somewhere around 21,700. The resistance for this is 21,850 level. I would slightly deviate from the levels that you've given. Yes, technically the retracement level resistance is at 21,800. But if you look at the options chain, it is between 21,800 to 850. And only if we close about 21,850, we would see the upward trajectory continue to retest 22,000 and 22,000 plus levels. But monthly expiry is a big thing, and markets do get impacted a lot on expiry days. So for this expiry, if you look at the aggressive narrow trading range, then it is 21,500 to 21,850 for the January series. Overall, no major indications of any major breakdown. The huge support that comes in is at the recent low of 21,300. If we close below 21,300, then that calls for a breakdown, and we may see downside levels of around 20,950. So as of now, there are no indications. 21,500 to 21,850 is the current working range that we are looking at.
All right, and talking about Nifty Bank, now we have been talking about how it has been struggling with the 48,000 mark. Now we are pretty much about 1,500 points or so below that. But a good bit of bounce back, in the last couple of sessions. Even this morning, we have opened above the 46,000 mark. 46,500 although remains somewhat elusive, isn't it?
Yes, Suyash. So 46,500 is where the major open interest is for the January series. So immediately it looks difficult that it may cross. In fact, technically the level is around 46,550 to 600 area. That is the area where we may see a second round of sell-off that may set in. Because there are no, although there is shedding happening in the calls on the higher side, minor shedding, but there is no addition in the puts that can confirm the base formation at around 46,000. So there is high probability that we may see a sell-off coming in again at around 46,550 to 600 area. And only if we close above that, there are multiple resistances on the upside. 47,000 would be the next resistance level. So we need to wait and watch. Bank Nifty is still within the range. It's still underperforming. Although Saturday it was an outperforming index, but today it is back to its characteristic of being a laggard. So Bank Nifty will be crucial for any further up move for Nifty also.
All right, and moving on to stocks, over the weekend we had a lot of big companies coming out with their earnings, and the biggest of course being ICICI Bank. Strong set of numbers, but net interest margin continues to remain under pressure as was expected for the major private banks. But good price movement this morning. It's up somewhere around 3%, in fact more than 3%, and has also scaled a new record high. So what are the levels you're tracking on ICICI Bank?
So Bank has formed a very good base at 960 level, and from there, as long as it remains above 960, there will be an attempt to test 1100 levels on the upside, slowly and gradually. There is shedding seen and 1000 call for the January series, which is like the ATM call as per Saturday's closing. And if we are looking at shedding that happened end of the day basis data, that was a good sign that ICICI Bank results would be good, and that's what we are seeing today. So overall, the upside is up to 1100 that we are targeting, with a small stopover around 1050 to 1060 level, 1060 levels. So this area may pose some hurdle. We may see some cool off coming in around those levels. And then post that it will again resume the upward trajectory towards 1100.
All right, that's the view coming in on ICICI Bank. But Avni, stay with us as we'll be right back with a short break.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News9 Plus, ahead of the curve.
It was my 14th birthday.
On birthday, daughter waits
Home missing father.
He was carrying a cake for his daughter.
49-year-old Birmingham-based
Indian diplomat vanishes.
He was grabbed and bundled into a car by 4 assailants.
KLA claims responsibility, demands Kashmiri separatists.
Makbul Bhatt's release.
Goli maro, or bang.
And within 3 days, they shot him dead.
Abducted diplomat.
Found murdered in Leicestershire.
I said, who ordered to kill him? To me, he said, yes, I ordered it.
And he never came home.
Stop searching. Start streaming. Download the world's first news OTT. News9 Plus, ahead of the curve.
Welcome back. You are watching First Stick here on News9. And Indian markets now, they are in fact at their day's low. Nifty has even broken below the 21,700 mark. In fact, it has broken below the 20-day moving average, which was being looked at as a key support for the index. And currently, Nifty as we speak is down about, it's still up about 0.5% or so, but has fallen below the 21,700 mark. and quite a bit of volatility we are seeing. That's why we are pretty much hovering in that range, in that 20-30 point range. Sensex has also fallen below the 72,000 mark. It's down about 200 points from it. The broader markets now, they have turned negative for the day. Mid cap 100 index is down 0.09%, but still defending the 48,000 level, and the small cap index, that is down by about 0.21% below the 15,500 mark. But Avni, coming back to you, Zee Entertainment, I want to talk about that. Now, the stock is at a lower circuit, 10% lower circuit this morning, and this was on the back of course, Sony calling off its merger with the company after working on it for nearly 2 years. What's your take on Zee Entertainment? Is there more pain in the offing?
So let's wait and watch. I think the kind of sellers that we are looking at the lower circuit level, in case once this circuit level opens and we see further downside, we may see probably one more 10% circuit on the downside today itself. 175 to 178 is a very, very crucial support level. And in case the closing is below those levels of 175, then the game is over for the stock. We may see the downfall extend right up to 120 to 125 levels. So as of now, avoid taking any bets on the stock because there's a lot of speculation. It may probably, the fallout from the Sony Zee merger news has come out. We may see some positive news coming in with respect to merger with some other company, which I don't want to name right now. But so there will be a news flow activity that will keep going on. Avoid the stock as of now. Strictly based on technical levels, 175 is the support level that you should look at. If that is breached, then just get out of the stock because the downside may extend up to 120, 125 levels.
All right, that's the view on Zee. But Avni, before we let you go, any short-term picks in this market?
Yes, see, there's a stock-specific activity is pretty good. Even last week, whatever stock recommendations we had given, all four recommendations have hit almost their targets. And so even this week, we've carefully curated a list of 5 stocks that can do good irrespective of where the market goes. My first pick would be NTPC. But one needs to buy these stocks on dips. For NTPC, the level would be 305 to 306 and target would be 322 and stop loss can be kept at 296. The second pick is L&T. L&T can be bought in the range of 3600 to 3610, targeting 3780 on the upside and stop loss can be kept at 3525. The third stock that we like from a very short-term perspective is Glenmark Pharma, around 875. 915 is the target on the upside and stop loss can be kept at 847. Fourth stock is from the IT sector, which is Bsoft. Buying range would be 800 to 805 and target is 855 and stop loss can be kept at 767. And last is from the PSU banking space, which looks pretty good and robust. So Bank of Baroda is my favorite pick in this. 228 to 230 is the entry level and target would be 242. Stop loss is 222.
Right, those are the picks from Avni Bhatt. Ma'am, thank you for joining us here on News9. Appreciate your time and your thoughts.
Thank you.
But moving on, we have the earnings of Axis Bank that will come out later today. The expectation is that it will come out after the market hours. But let's just run you through what's expected from the Q3 results of Axis Bank. Now, net interest income, which is the difference between interest earned and interest expended, is expected to surge by about 8.6%. Now, that is on a year-on-year basis to 12,555 crore from 11,560 crore in the year-ago period. Profit, that is expected to increase by about 4% to 6,114 crore from 5,853 crore in the year-ago period. Net interest margin, now that is expected to contract by about 20 basis points to 3.9% from 4.1% in Q3 of FY23. But to discuss what's expected from the Q3 print of Axis Bank, let's also bring on board Mr. Mohit Gang, co-founder and CEO at Moneyfront. Good morning, Mohit. Thank you for joining us here at News9. What's your expectations from Axis Bank? You know, so far the results from the large private banks have been good as far as the headline numbers are concerned. Asset quality has improved. But, you know, there is, of course, concerns about margins shrinking with all, at least, you know, the big private banks like Kotak, ICICI, HDFC Bank, to name a few. And do we expect a similar trend with Axis Bank as well?
Hi, morning Suyash. Always a pleasure to be on your show. So look, I think the results season so far has been very well in the line, except for I would say HDFC Bank. But ICICI Bank was quite a good result, and the stock is already showing signs of that in the morning trade today. I would assume that the Axis Bank would follow suit the trajectory of what ICICI and Kotak have done. My sense is they would give us a beat on the profit numbers, especially the PAT numbers, and overall on the revenue growth. Even the CASA margins should hold stable or slightly improve from what they have been showing. And I also think the slippages number, which has been a good show across all banks, will continue to be a good story for Axis Bank also. Along with that, I think the merger with the merger, or let's say acquisition of Citibank should start showing up in the overall numbers of Axis Bank, and I would assume that the asset quality should improve because of that merger, and also the fee income should improve because of that merger. The only concern area, which has been a trend across the private banks, is the NIM compression, which we have seen, and I think for Axis we are expecting around 20 bips of compression, which you have also shown on your screen. I think that's also happening across the banks per se, because the deposit repricing has been a phenomena across the board owing to elevated interest rates, and I think that would likely continue for next quarter also, and post which we should see some stabilization on the NIM front and maybe some improvement thereof. But my sense is this is a trend across the banks. So overall, I think 20 bips of compression as well, market will take that happily. My sense is that.
All right. And, you know, a lot of this credit growth, you know, that was coming from the unsecured lending. And as we know, RBI has in fact tightened the noose by increasing risk weight on such loans. Now, will that lead to some quarters of pressure on margins as well?
I think that's leading to the overall story of margins. Somewhere it is all factored in basically. So RBI has tightened the screws on many fronts. It's not just the unsecured lending part, also the provisioning for AIFs, which is happening across the banks, is also one of the things. And that number is also fairly significant, which we saw in the case of Kotak also. Right. So I think RBI tightening the noose is a fairly good thing for the market from the overall health perspective of the banking system in the country. Because as markets continue to see a rapid bull rise, right, I think some areas and some sections will continue to develop froth. There could be unabashed lending to segments which hitherto are prone to defaults or are prone to not paying up on time. So my sense is RBI is doing taking the right steps, and those things are reflecting on the banks' numbers. But I think it's all in good stead for the overall health and positivity of the entire sector put together. So I think results should give us a positive uptick, and Axis Bank has continued a good trajectory. If you see for last 3 odd months, it's actually outperformed the bank Nifty, and I would assume it will continue the trend going forward also.
All right. And moving on, you know, the big story for at least yesterday and today's is that Sony calling off its $10 billion merger with Zee Entertainment. Now my question over here is, of course, we have seen a big correction in the stock of Zee. It's down about 10%, locked in the lower circuit. But who gets hurt more here? Zee, because of course it's losing on a lucrative deal with Sony, or Sony, which, you know, perhaps was looking at a partner to make a foray or at least bolster its presence in India?
Look, Suresh, I think there's no dearth of entertainment in the Zee Entertainment saga, to be very honest. I think the story has gone through many twists and turns, and it's like a potboiler, which one could expect from two media companies, honestly. I think it hurts both. Just to answer you on that front, it hurts Sony because if Sony has aspirations to compete with Viacom and Disney, which are likely to come together pretty soon, then it also needs a lot of ammunition under its belt. So my sense is, I think from Sony's perspective, it could have become a big challenger to the to the Viacom Disney conglomerate, which is about to come. Perspective, I think it is extremely hurtful. It is extremely hurtful because honestly, Zee's number have not been very encouraging of late. They are struggling to consolidate their revenues. They're struggling on the profitability front. Their debt levels are high. And I think this overall thing has somewhere dented the sentiment around this entire deal, and which is quite evident on the stock. And my sense is it won't stop here. It's a falling knife and it can fall to any extent. So, but yeah, look, on the other side, I also think there is something more to this entire thing, this entire saga than that meets the eye. Look, only on the ground of the MD not being as per what Sony wanted, I still found that could have been resolved amicably if that was the only conditionality of the entire thing which was obstructing the deal to go through. But my sense is there are a lot many reasons which perhaps we might know in future or we might never come to know. But yeah, there are underlying reasons for it, and I think from a Z's perspective, this is extremely bad unless someone else comes out and bails them off now from this situation, which also is a likely outcome. If the stock corrects to a reasonable level, I'm sure there could be some bidders available in the market for this kind of a property. And from Sony's perspective, it could have actually consolidated its market position, which perhaps is extremely important in a market which is now rivaling OTTs and other threats to its existence, right? So I think it's hurtful to both, but for Z, it is extremely painful.
All right, that's a view on Zee and Sony saga. But before we let you go, Mohit, Medi Assist Healthcare, now that has listed at a premium of about 10%. The stock got listed on both NSE and BSE at 460 rupees per share versus the issue price of 418, slightly ahead of expectation. Market was expecting a premium of somewhere around 5 to 8%, so a better than expected listing for sure. But is it a long-term hold, or should one look to book some bit of profits after that 10% sort of gains at listing?
Look, Suresh, my personal take would be to take off the profits off the table if you are already, if you've got some allotment on in the IPO. Look, market is extremely bullish right now, and everything is going upwards with the rising tide. So this is slightly, I would say the stock is listed at a premium, which is great, but it is listed slightly ahead of its fundamentals. Honestly, it's very expensive at these levels. For the kind of business it is in, which is an asset-light business. I understand that, but it's a business which can be disrupted anytime, right? And those kind of valuations perhaps are a little overstretched to my imagination, and I could be wrong on this one, but I would still try and take off my profits and try and enter the stock with a long-term perspective only at lower levels.
All right, that's Mohit Gang for you. Mohit, thank you for joining us here on News9. Always a pleasure speaking to you.
My pleasure. Thanks.
But before we wrap things up, let's just quickly run you through how the markets are placed this Tuesday morning. As of 10:10 a.m., the markets are in fact at the day's low. Nifty 50 is still up. It's still in the green. It's up somewhere around 0.4% or so, but at the day's low we are at 21,654 mark. The day's low sits just about 20 points from it. Sensex also continues to fall. The index is up 0.42% at 71,725 mark, just about 50 points off its day's low. The mid cap and the small cap indices, they are feeling the pain. Both of them had, in fact, mid cap 100 was at a record high in the opening trade, but it's down 0.6% this morning. Small cap index, which was within a stone's throw away from its record high, has slipped 0.75%. But volatility continues to decline, and India VIX as of 10:10 a.m. this morning is down 2.5%, and it's comfortably below the 14 sort of levels. But that's all we have in this edition of First Take. But stay tuned with us as we'll be right back with Business Plus on the other side.
करेंगे तो पता लग ही जाएगा. सलमान खान का करेंगे, मारेंगे यहीं जोधपुर में मारेंगे तो पता लग जाएगा.
This is someone who is sitting inside our jails and is still very obviously and openly running and possibly the largest organized criminal operation in the country.
Student organization of Punjab University में सोपू का acting president type भी रहा है.
He was a troublemaker, getting into fights with people, not coming to the class.
As on date, it appears that Lawrence gang is the most important, the prominent gang. Gangs here in Punjab, they are intimidated.
Today he is India's most dangerous gangster, and India's presence are apparently no bar to how Bishnoi runs India's largest criminal empire.
News is now content. Just stream it. Download the world's